Hello guys, today we say about what is an order book. Okay, let's go. What is an order book? An order book lists all the open orders with different offers from buyers and sellers for an underlying circuit. Definitions, examples of order book. An order book in an electronic or written list of all the buy-sell orders investors have made for a particular security. It lists the prices buyers and sellers are willing to pay and how many orders are submitted for the purchase price. Investors use order books for dictionary analysis of potential investments. For example, knowing the price and the volume of orders behind those prices can indicate with direction or trend the underlying security might move. An order book is often included in that is known as lab to market date in depth date on which and asks for a partition. Security orders can be listed by order volume or price and update in real times. Say you want to determine the amount of interest other investors have in a particular security, you can look at the order book to find all the open orders, including the respective price and the wall of orders at each price. This information gives you a good idea of the invested in that certainly the sentiment of investors and the overall market depth of how that security is trading. You can use this info to supplement your analysis and determine whether you should invest in this particular security or take a long or short position. How does an order book work? Major stock market examples such as the NYSE or the Nasdaq use an order book to record the open orders and market interest of listed securities in real time. The order book also identifies the buyers and sellers behind each open order. However, some investors hide their identities behind their orders by investing in what's known as a dark pool. Order steps. Each time an order is placed, it is listed in the order book until it's fulfilled. An investor can submit 4 types of orders that would report as an orders within the order book. They are market orders, limit orders, stop loss orders, and trailing stop orders. Market orders, an order to buy or sell a security on the exchange processed emission at the certain market price. Limit orders, and orders that allows investors to fulfill an order only at the submitted limit price or lower of the submitted limit price or stop loss order. Stop loss orders are used to limit an investor's loss by triggering an immediate buy or sell when the underlying and security is losing money. A trading stop order is a stop loss order placed at a specific dollar amount or a percentage above or below the most recent HIC low. Yes. One order book takes all the pricing information of the different trades and aggregates them according to price and volumes used to analyze while making investment decisions. Bid or ask. For every security trade there is a buyer and a seller and a bid and ask price. The price at which the buyer is willing to pay for a security is the bid, and the price at which the seller is asking for the security is the ask. There will usually be a gap between the bid and ask price called a spread or bid-ask spread. The bid-ask spread represents the difference between the bid and the ask price and is dependent on the volume of trades submitted. For example, if there is a large volume of open orders in a securities order book, the bid-ask spread will be thinner and vice versa. Pros explained. Helps measure market sentiment of a particular security. The ability to view how many trades are placed at a specified price is an indication of the market's overall sentiment for the underlying security. Gives investors an indicator of whether there is a bullish trend or a bearish trend. Seeing orders placed for buyers and sellers at a range of different prices with their respective volumes can indicate whether a security may have an upward or downward movement in the near future. Cons explained. Order books info may not be relevant for long-term investors. Investors who use the order book to place a trade are often short-time day trades or investors looking to determine the opportune time on the market. Order book trends can change quickly. The order book is updated in real-time markets. The date you have time sensitive. If you are basing a trade on order book date, keep in mind that the date might only be relevant for a short time. What is it means for individual investors? Understanding the order book can give you an edge on when and at what price you should enter the market for a special investors. It can reveal both the depth of trades behind a security and prime market information, giving you indicators of the best price to enter the market. However, long-time investors often use is to time the market to get the best entry price. Individual investors should be wary of using the order book as a fundamental reason behind an investment, as it doesn't give guarding indicators of a direction movement of a security. Bye bye guys.